Welcome back to the AlgoBot channel, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm AlgoBot, and today we're studying an expert advisor called Kalman Velocity Trend. This one is built on something a little different from the usual moving average, a two-state Kalman filter that estimates not just a fair price, but the market's velocity, its rate of change from one bar to the next. By the end of this video, you'll understand how the filter works, how the strategy times pullback entries within a trend, and how it manages its stops and targets. Remember, this is educational content only. Let's dive in. So what exactly does Kalman Velocity Trend do? At its core, this expert advisor is a trend pullback system. It's designed to trade in the direction of an established trend, but instead of chasing price as it extends, it patiently waits for a small pullback and then joins the move as it resumes. The engine behind it is a two-state Kalman filter. If you've never met a Kalman filter before, think of it as a smart estimator. It maintains two hidden ideas about the market at once. The first is the level, a noise-reduced estimate of fair price. The second is the velocity, the estimated change in price from one bar to the next. That velocity is the real edge here. A traditional moving average only gives you a smooth level, and you have to infer its slope after the fact, which always lags. The Kalman filter estimates the slope directly, so it tends to turn earlier and gives a cleaner read on whether the market is drifting up, drifting down, or simply going nowhere. This expert advisor works on any symbol and any time frame, because its noise settings are expressed as fractions of the average true range. In other words, the filter automatically scales itself to each market's own volatility, so you don't have to hand-tune raw numbers for every pair. It's a symmetric system, meaning it treats long and short setups as mirror images of each other. In terms of who it suits, this is really for traders who are curious about the mechanics of state estimation and want to study how a filter-based trend model behaves. As always, nothing here is a recommendation or a promise. Trading carries genuine risk, losses are part of the process, and this walkthrough is for educational purposes only. Let's walk through the exact logic, step by step. Everything happens on closed bars only. When a bar completes, the expert advisor takes that bar's closing price and feeds it into the Kalman filter as a fresh measurement. The filter then does two things. First, it predicts, assuming the level moved forward by its current velocity. Then it updates, blending the prediction with the new close according to how much it trusts the measurement versus the model. Out of that update come two refreshed numbers, the filtered level and the estimated velocity. Next comes the trend gate. The strategy measures the size of the velocity and compares it to a threshold, which is set as a fraction of the average true range. By default, that fraction is 5/100ths. If the velocity is positive and larger than the threshold, the market is judged to be in an up regime, and only long trades are allowed. If the velocity is negative and beyond the threshold on the downside, it's a down regime, and only short trades are allowed. If the velocity is too small either way, the market is treated as directionless and nothing happens. Crucially, the sign of the velocity decides the only side the strategy will consider. Then comes the entry itself, which the code calls a pullback reclaim. In an up regime, the expert advisor waits for price to dip below the filtered level and then, on a following bar, to close back above it. That combination, a dip beneath the line followed by a reclaim of it, signals a pullback that has resumed in the trend's direction, so the strategy opens along. In a down regime, the mirror applies. Price rallies above the filtered level and then closes back below it, and the strategy opens a short. Position management is straightforward. Only one position per magic number exists at a time. If an opposite signal appears while a trade is open, the strategy closes the existing position first and then opens the new one, so it can reverse cleanly. Finally, risk. Every trade is protected the moment it opens. The stop loss is placed at a multiple of the average true range away from entry, 2 times by default, and the take profit at another multiple, 3 times by default. That gives a reward-to-risk shape of roughly 3:2. Position size is a fixed lot. Here's the heart of the strategy in MetaEditor. At the top are the inputs you can adjust in the tester. Process noise and measurement noise are both expressed as fractions of the average true range, and together they control how responsive or how smooth the filter is. The velocity threshold fraction sets the trend gate, The average true range period feeds both the noise scaling and the stops, and the stop and take profit multipliers shape the risk. Below that is the decision block. The strategy computes the velocity threshold from the current average true range, then flags an up regime when velocity is above it and a down regime when velocity is below the negative of it. The two reclaim booleans capture the pullback. Reclaim up is true when the previous close was below the filtered level and the current close is back above it, and reclaim down is the exact mirror. A long signal requires both an up regime and a reclaim up. A short signal requires a down regime and a reclaim down. Now look at the two entry blocks. For the long, the entry price is the ask. The stop loss is placed the stop multiple of average true range below it. The take profit the take multiple above it. And the order goes in through trade.buy. For the short, it's the mirror. The entry is the bid. The stop sits above, the take profit below, and the order goes in through trade.sell. Both stops and targets are normalized to the symbol's digits. Notice how the two sides are perfectly symmetric. The same logic, simply flipped. Let's bring the whole strategy to life on this illustration. Along the top you can see the price candles, and running through them is the blue Kalman filtered level. Below, in the subpanel, is the estimated velocity, our direct read on the trend slope, with a green up gate line and a red down gate line marking the threshold the velocity must clear before trading is allowed. Watch the opening candles on the left. Price is stepping higher, one candle after another, and notice what the velocity is doing in the panel below. It climbs and holds comfortably above the green up gate at roughly 0.8. That tells us the filter has recognized a genuine upward drift, not just noise. We are now in an up regime, and the strategy will only look for long entries. Then on the third candle, price does something the strategy is specifically waiting for. It pulls back and dips below the blue filtered level. It's close slipping under the line. On its own, that dip is not an entry. The strategy needs confirmation that the pullback has resumed in the trend's direction. That confirmation arrives on the very next candle, which closes firmly back above the filtered level. Price was below the line, and now it has reclaimed it, while velocity is still positive and above the gate. That is the pullback reclaim, and you can see the buy entry marker appear right there. From that entry, follow how the move unfolds. The next two candles push higher, velocity staying strong in the panel, and price extends steadily upward. A few bars later, it reaches the take profit level, and the take profit marker closes the trade for a gain in this illustration. The stop loss, had it been needed, would have been sitting a couple of average true range multiples below the entry, but here the trend carried price to its objective first. Now the character of the market changes, and the strategy adapts. After that peak, price rolls over and begins stepping lower. Look at the velocity panel again. It falls through zero and pushes below the red down gate line. The regime has flipped from up to down, so from here the strategy will only consider short entries. The long side is switched off entirely. The setup mirrors what we just saw. As price grinds down, one candle stages a small rally and closes back above the blue filtered level, a bounce against the prevailing downtrend. That rally is the pullback in a down regime. Again, the strategy waits for confirmation. On the following candle, price rejects the level and closes back below it, while velocity remains firmly negative beneath the gate. Price was above the line, and now it has fallen back under it. That is the reclaim to the downside, and the sell entry marker appears. From there, watch the move roll on. The next candles print lower closes, velocity deepening in the panel, and price slides steadily down until it reaches the take profit level, where the second take profit marker closes the trade in our example. Had price instead climbed back against the position, the stop loss above the entry would have capped the loss. Notice a few things about how this all fits together. The velocity panel is doing the heavy lifting. It decides the regime and which single side is permitted, and it turned early because the Kalman filter estimates slope directly rather than inferring it from a lagging average. The blue level line is doing the timing. Price has to dip beneath it and reclaim it to enter, which keeps the strategy buying pullbacks rather than chasing extended moves. And the reward to risk shape, roughly 3-2 by default, means each take profit target sits a bit further from entry than the protective stop. Of course, not every setup runs cleanly to target like these two. In real markets, some reclaim entries are stopped out, and that is a normal part of the process. And that brings us to the end of our look at Kalman Velocity Trend. We covered how a two-state Kalman filter estimates both a fair price level and the market's velocity, how that velocity acts as a trend gate to decide the regime, and how the pullback reclaim times entries as trends resume, all wrapped in average true range-based stops and targets. Everything you have seen today is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. Markets carry real risk, and losses are a genuine part of trading. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling us which strategy you'd like us to study next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.